Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Meera Pandit, Global Market Strategist, JPMorgan. She's got a real job. Meera, are you guys in the new building yet?
3 weeks. 3 weeks we move in.
3 weeks you move in.
3 weeks you will move in.
We will move in
Okay.
after waiting for 6 years. I did still love the old 270 Park, but this one is pretty spectacular.
I spent a lot of long nights at 270 Park doing
By the way,
deals there.
I have to ask, what is happening to that building? Do you know? The old building.
Well, that was torn down.
They took it down piece by piece over the course of the pandemic, very methodically.
Yep, so they built right on the same spot. And now they're going to redo the old Bear Stearns building, which they own.
But there's something across the street from the new building now. That's okay. There's so many buildings.
They own Midtown. They own Midtown. All right, here's the question. It's 8:42 a.m. I'm probably not even the first person to ask you this today. Is AI a bubble?
When we think about some of the fundamentals that we're seeing in AI, we do not see a bubble at this point, but certainly there's a lot of exuberance around it. So there's a couple of things we're watching. We want to make sure that we continue to see these companies produce revenue, to monetize their technology, not to take on too much leverage. Look, a little bit of financing from the capital markets, from the debt market specifically is okay. That's good capital allocation, but we don't want to see too much leverage. And we want to make sure that that adoption continues. The risks are around if that adoption doesn't continue, if it starts to tail off, if people aren't actually using the paid versions of these technologies, or if it's more of a consumer technology as opposed to an enterprise technology. We want to make sure that the energy supply is still there. We want to ensure that the circularity of deals is one that is necessary to build up the industry, but not necessarily getting too incestuous in terms of if there is something that falls down. But overall, we do still feel like we're in a good place when we come out of earnings season, and we still see those earnings surprises of the Mag 7 that have reported so far above 10%. And also investors being discerning about the companies that they do feel good about the pipeline versus ones where they are a little bit more cautious. So you're seeing some of that market reaction commensurate with how these companies are reporting. But there's a lot of momentum in this space for good reason.
Speaking of earnings, we've got AI darling Palantir actually getting slammed in the pre-market. Last I checked was down about 7%, even though earnings are pretty spectacular. So are traders now finally moving their focus to valuations? And do they make sense? Do they fit?
We need to make sure that when we think about some of the activity within the markets, that there are periods of healthy consolidation and healthy correction. We saw that earlier this year in January with DeepSeek. We saw that also in April around some of the tariff concerns. And even if we look over the arc of the last couple of years, you have seen significant double-digit drawdowns, sometimes in some of these individual stocks, sometimes in the cohort around either the Mag 7 or the AI trade. I think that is a healthy thing. Even within the scheme of a longer bull market in some of these stocks, you're still going to have these periods of volatility, and investors need to be prepared around that and have that cushioning in their portfolio for when we do see days like this in certain stocks. Even if this is a longer bull trend, we do have to remind ourselves that this can be cyclical. There's a chip cycle, there's a CapEx cycle. There are going to be fits and starts in terms of how the competitive landscape and the competitive moats change. So in that regard, having a good sense of diversification within the AI theme and beyond the AI theme will be important. We should expect days like this.
We're about 2/3 of the way through earnings in the S&P 500. What's been your takeaway so far?
The standout to me has been around financials, because we have seen that financials has been one of the biggest contributors to upside EPS, and all of the subsectors have actually had double-digit growth. So that has been a standout outside of tech, and I think it's one of the few areas of the market that is not embedded in the AI trade, because you do see areas like industrials and utilities as good ways to diversify along the AI spectrum, but it's not outside of the realm of AI. And you're still seeing that the macro fundamentals they are seeing, the financials companies are solid. They are exposed to consumers all along the income spectrum and still feel confident about the state of the economy. Yep. And the enthusiasm about deregulation, even if it's been passive deregulation thus far, has been helpful. So that's my big takeaway, contributing to this 4-quarter now streak of double-digit earnings growth within the market.
Yeah, I mean, we got some pretty solid earnings numbers. We got a Fed that's cutting. It's not surprising to see this market marching higher despite the pullback we're seeing here today. Meera Pandit, thank you so much for joining us. Meera Pandit, Global Market Strategist, JPMorgan Asset Management. Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Traders woke up this morning, Paul, and said, I don't know, could the market be overvalued?
Yeah, right, exactly.
It's all about valuations today. We've got a couple of big Wall Street CEOs flashing warning signs about this market possibly being overvalued, saying we could be in for a big pullback by as much as 10% in the next 12 to 24 months. Let's talk.
Anybody can say that. It's just.
I'm so glad you said it. I
don't talk to their traders on their desk. I don't want to hear from these folks. I want to hear from the traders on the desk.
I hear you. Well, let's bring in Jennifer Lee now. She is the senior economist at BMO Capital Markets. Jennifer, thanks for being with us on a very, very busy both business news day, political news day. I know you're an economist. Just want your thoughts, though, on what we're hearing from these big CEOs. Morgan Stanley's Ted Pick, Goldman Sachs' David Solomon, saying that this market's due for a 10% pullback in the next 12 to 24 months. To Paul's point, I don't think you need a degree in finance to maybe think this market's overvalued. What are your thoughts?
Oh, well, good morning, and thank you very much for having me on this very busy Tuesday. You know what? It's definitely not my role to make calls on the equity markets, but I will say this: just given all of these balls that are in the air, that some of them are being dropped and some of them are being caught. You know, there's this. It's the whole word of uncertainty, and this is the world that we are living in now, which could cause a lot of chaos in almost everywhere, and certainly I'm sure it caused a lot of high-level discussions or heated discussions at the latest Fed meeting, as an example, which is why we saw so many different views that are being displayed right now or being projected out to the world about how they see the monetary policy playing out. So again, just circling around your question right there, just basically saying that uncertainty is the driver for a lot of these movements these days.
And Jen, we had the Fed cutting interest rates by 25 basis points as the market all expected, I guess. But December kind of in question here. With the dearth of economic data out there, how do you think they're going to proceed come December?
So I have to admit, I sort of eye rolled when I heard Chair Powell say this line, but it's very, very accurate. He said, what do you do when you're driving in a fog? You slow things down. You tap on the brakes a little bit, and that's what they are doing. We are still looking for a Fed rate cut, another 25 beeps in December. Obviously, if we are still in shutdown mode, that would be. It's almost like it would almost be another cause for cutting rates, just because there is just so much, again, uncertainty. We have 750,000 people who are furloughed and not getting paid, and of course we're seeing a lot of declines in all the benefits that are normally being paid out this time of year. So again, just with the lack of data, perhaps it would even suggest that we should be getting another Fed cut in December.
And Jennifer, we know that in past shutdowns, GDP has taken a hit, but then it bounces back. We gain back nearly everything we lost once the government opens up. Do you see that happening this time? Does this time feel different? And if so, why?
We are still looking for, we haven't actually touched our fourth quarter growth forecast just yet, but I think we're on the precipice of doing so. But, just given the fact that, the workers will be paid. At one point, by the way, there was a question whether or not all of them will be given their back wages, but it sounds like they will be paid. So we will see that. We should be seeing that bounce back. I don't think it's different this time. If anything, we're still seeing the benefit of lower or easier monetary policy, which is helping support, business investment, somewhat the housing market a little bit. So we should see that bounce back. I don't think this time it's going to be that much different.
So, Jennifer, with the lack of economic data coming from the U.S. government, I think maybe investors might be paying a little bit more attention to really the fine print of corporate earnings we're seeing here. Is there anything you're gleaning from the earnings? We've had about 65% of the S&P 500 reports so far. Anything you're taking away from corporate earnings so far?
So far, they're holding up. Again, this is a little bit of a look in the rearview mirror, I'll have to say. But just the fact that the job market is still holding up. Obviously, things have slowed meaningfully over the last few months. Whatever data that we have seen, but so far we haven't seen a big drop off in jobs. Jobless claims are still hovering around similar areas at the statewide level. So that would help consumer spending, and that would continue to support earnings. But again, of course, all this uncertainty going forward is another question. So again, we still look for steady-ish growth, but slower growth in the fourth quarter, given the shutdown in the early months of January. But again, we're expecting growth to recover somewhat in at least the first half of the year.
And if these were normal times, what's normal nowadays, but if these were normal times,
no
we would be getting an unemployment report from the government this Friday, and it doesn't look like we're going to unless the government reopens between now and then. So what will you be looking at specifically in terms of private data to sort of piece together the jobs puzzle?
So, we've always been looking at the private sector data, especially ISMs, the Conference Board, the ADP, because I've always said, one can never, ever look at just one piece of economic data, even though it's from the BLS as the be-all and end-all. You should be looking at all the different surveys of jobs just to make sure that we're all pointing in the same direction, because if we're not, then there is something wrong. So we continue to look at the different levels of hiring and firing, of course, and wages as well. But I thought it was kind of interesting that the ISM surveys, at least the one that we saw yesterday, was suggesting that that we're sort of on hold in terms of the job front, just given all this uncertainty still with trade. And of course, this was, I believe, taken before last week, before all the trade deals were secured by the U.S. administration and a number of the Asian countries, which is good news. And of course, the positive news coming from the U.S. and China, having that, I believe it's a 365-day pause now. So that is actually a good thing. But at the same time, just given this environment, you never know if that could actually be sidelined a little bit.
Jennifer, you're based up there in Toronto, so thank you for a great season from your Toronto Blue Jays. It was a great World Series. Thank you. Hopefully you guys are feeling okay about that. It was a great season. Well, how are you guys? But you're also, Canada's our number 2 trading partner. What's the feeling these days about the whole tariff situation here? It seems to have kind of taken a little bit of a back seat here. How are you guys thinking about it day to day?
It's still very, very unsettling. I mean, given the fact that the U.S. is our biggest trading partner. 75% of everything that we export goes to the U.S. 55% of everything that we import comes from the U.S. Wow. So when we have these trade breakdowns, these talk breakdowns, especially recently, it's extremely unsettling. So, we are trying to, I believe that there are still conversations being had between high-level officials on both sides of the border, which is a good thing. And I will hope to cross my fingers that that this freezing out of Canada right now will come to an end shortly. Again, encouraging that the U.S. had all the trading deals with everyone else out there in Asia. They've got a little bit of a pause right now with Mexico, so Canada is next up. And, we've got the USMCA, which is a huge deal for both America and Canada and Mexico. And I don't think that can be lost on anyone right now.
All right. Jennifer Lee, Senior Economist at BMO Capital Markets. Thanks so much for your insights. We appreciate it this morning.
Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Let's bring in former Congressman Patrick McHenry of North Carolina, also former chairman of the House Financial Services Committee and a Bloomberg contributor. Always good to see you. Thanks so much for joining us this morning. I guess I'll just start with the passing of Dick Cheney. I mean, your time on the Hill overlapped some of his time on the Hill. What are your thoughts this morning as you hear this news?
Well, look, for when I got elected to Congress, Vice President Dick Cheney was the conservative. Strong foreign policy, strong economic policy at home. He embodied the conservative principles of the Republican Party for more than a generation. He served 4 presidents at the highest level, and effectively as vice president was a senior staffer to the president, very different than what we've seen with recent vice presidents, and so really a sad day for he and for his family, my heart goes out to them, and my prayers go to them on a day like today. But a real loss for somebody who really embodied the Republican Party and the conservative principles that I ran on, when I first got elected to Congress.
Any stories that you can share, though, Patrick? Any sort of behind the scenes stories, maybe something we don't know about the former vice president?
Well, look, he was constantly available to folks on the House side. That's different. Most vice presidents orient to the Senate because they're creatures of the Senate. The vice presidency is a creature of the Senate. But for somebody like me, who is a new House member, the care that he took with us in some call the lower branch of the legislature, the legislative body, was really special. And I remember after he left office, this was a year after he left office, I invited him over to dinner for a group of us, a group of House Republicans when we were then in the minority. And we were all delayed getting there because votes had kept us. And we show up at the restaurant, and this is in the evening, and Dick Cheney has his newspaper out, reading at an empty table with one Secret Service agent sitting out the door. And he looks up and says, "Oh, nice of you to join me." But he didn't have an attitude about it. No presumption. He knew what it was like to be a House member, and was always sensitive to us and to taking care of us, paying attention to us, which is really incredibly kind.
Patrick, we've got some important races for the governorship in New Jersey and in Virginia. What are you looking for? What do you think these races may mean, just maybe more nationally?
Sure. I mean, these things tend to Virginia and New Jersey are Democratic states in recent elections in serious ways. We have a Republican governor in Virginia elected in a Joe Biden first year into the presidency. We see going back to President Obama's time in office, it became really about the margin and what that margin meant for the president's midterm. So I think we'll see a lot of parsing of the numbers. I think we clearly see today, I see this by studying the tea leaves here, that you have you're likely to have a Democratic governor in New Jersey and continue that long tradition in New Jersey. And you're likely to have a Democratic governor in Virginia. But I want to see what the demographics and the turnout say about what the midterm will be, what the voter sentiment is when they go to the polls. I see a lot of this, and we see this with the socialists running for mayor in New York, addressing the affordability issue. That is top of mind to the voters still 1 year into the Trump presidency. So addressing those key economic concerns of the last presidential election remain here 1 year into the Trump presidency. We want to see more of what the voters say about that when they show up at the polls today.
And Congressman, since we have you, we have to talk about this shutdown, which is now tied for the longest in U.S. history. Some people are saying, look, this may go on through Thanksgiving, which is still weeks away. What are your thoughts? What's it going to take to reopen this government?
Well, I think it's going to be reopened before Thanksgiving. I think you'll see enormous challenge with transportation issues around Thanksgiving, which will really be a sore spot for my Democratic friends who are the ones filibustering the reopening of government in the Senate. I think what we now see, what we'll see post-election, these midterms today. I think we'll see the Democrats come back to the table and negotiating a reopening strategy, a bit of a fig leaf on how they do that. But I think you'll see a clean continuing resolution. And then you'll see the work of appropriations and possibly healthcare policy, or an agreement to vote on healthcare policy as a result of it. I think we're in the final stages of the shutdown. Won't go on too much longer. I think we'll have this resolved by, I think the Senate will negotiate this out before Thanksgiving. And I think we'll see a reopening of government, at least through the holidays, and then fight it out come January on appropriations and healthcare.
Congressman, to what extent are the races today in New York City, New Jersey, Virginia, kind of laying the foundation for what may happen in the midterms? How do you think about that?
I think there's somewhat of a correlation between what the margin on these elections, but the demographics of these states, New Jersey and Virginia, are not really predictive, much less California, predictive of midterm success for the House or the Senate map. But we want to see what the voters are saying in the sentiment. I think what you also see is President Trump will be elevating potentially Mayor Mandami and highlighting him as a force and a show of what the opposition looks like. The Democratic Party being a socialist party, you'll hear a lot more of that coming out of today from the White House.
Congressman Patrick McHenry, we're so glad to have you on such a very busy political day here on Bloomberg Surveillance. Thanks so much for being with us. We appreciate your time.
Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Lisa Mateo and newspapers. Lisa, what do you got for us today?
Okay, so we know there's negotiations, right, between YouTube and Disney, and the war of words is ramping up,
boy.
Okay? So here it goes. So it started with Walt Disney. They were asking YouTube in a statement to bring back ABC because it's election day. So they wanted the service to be brought back. Disney said, we believe in putting the public interest first, hope that YouTube will take this small step for customers while we continue to work toward a fair agreement. So now YouTube came back with a response, and they put on their blog post, unfortunately, the proposal would permit us to return Disney's ABC stations only for a day, and it would cause customer confusion. And they even dug a little bit deeper, YouTube saying that, in fact, in the last 2 election days, the vast majority of YouTube TV subscribers chose not to watch ABC.
Harsh.
Yeah,
wow.
It's getting a little harsh, but they're back and forth. I mean, is this going to happen, or is it going to be brought back? Who knows? But it's just this back and forth between the two, YouTube and Disney.
All right. We've seen this before with the cable companies and then
sure.
and the networks. So it's the same.
It's sort of their
thing.
MO, yeah.
Yep.
That's what happens. Exactly.
And who pays the price? Consumer.
Exactly.
I know, because they just want to watch it. Yep. Okay, so this is kind of an interesting story. This one's from the Wall Street Journal. So it's kind of a look into what happens when small town America becomes data center USA. We've been talking about all of these data centers coming to these towns that maybe you've never heard of. So the Wall Street Journal shows the two sides to it, right? It goes to this small town in Northeast Oregon that's now have a big fleet of Amazon data centers. So you have Amazon, right? They're pumping jobs, people, money into the community of roughly 8,000 construction workers. You have builders building new neighborhoods in the area, businesses surging for suppliers of concrete fencing. But then on the other side, you have the residents who are saying, well, what happens when the building stops? You know, where do all the people go that were coming to our restaurants and coming to all these things? They say the cost of housing and childcare are rising because of it. And then the demand for services and infrastructure, it's left the governments kind of trying to rush
to
the
resources in that area, right? Or things like the electricity rates in those areas.
Yeah. So it's like this two-sided issue. And
how many
that's
people
what they
do
really
you
get
need
into.
to run a data center? I don't know.
Not that many.
I don't
That's
think
the
you
whole
do, right?
reason.
Yes.
Yeah. So once the builders and all the construction
I see. Okay.
leaves,
Yep.
there's nothing left but a big building.
Okay. Well, they're building these data centers where the energy is, apparently, because you need that.
Yes,
so
yes.
that's okay. I get it now. All right.
Okay, and this last one, this one's interesting. So Netflix looking to compete with YouTube. Source telling Bloomberg they're in talks to license video podcasts that are distributed by iHeartMedia. So now you have iHeartMedia shares
Formerly,
like up 30%.
Wow.
Formerly Clear Channel.
Clear Channel, yes,
And
correct.
who took Clear Channel
I
public?
did. That was you.
You're going way back.
Wow, you darn right I did. Lowry Mays, Randall Mays, Mark Mays. Absolutely.
See, I used to work for them. There you go. But they have these popular programs, right? The Breakfast Club podcast, Jay Shetty podcast. Mm-hmm. So if Netflix gets the exclusivity for them, full episodes are not going to be uploaded to YouTube anymore. And so that's where the competition is. I mean, Netflix and Spotify did a similar thing last month. So now Netflix reportedly going for iHeartMedia and trying to work this same thing with them.
What more can Netflix be doing? Apparently they're putting a bid in for Warner Brothers Discovery.
That's not going to happen. Oh, Netflix. Yes.
Yeah.
Well, they can do whatever they want. It seems
Yes,
like with their
pretty
stock
much
price.
they can.
Boy,
See?
their stock price, yeah.
And that's the thing. So now is this video podcast realm like a new source for them to compete with YouTube. So
they certainly see it as a moneymaker,
Yeah.
or they wouldn't be doing it. So, yeah.
Very good. All right, Lisa Mateo with the newspapers. We appreciate that. Always a highlight.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.